In this edition of INN CEO Talks, I'm joined by Gary Guidry, the President and CEO of Gran Tierra Energy. And we're talking about oil and gas in Colombia and Ecuador. Gary, welcome.
Thank you, Stu. Glad to be here.
Why don't you start by giving us a little overview of your company and why you're focused in both Colombia and Ecuador?
Sure. I think the biggest reason that we're in Colombia and Ecuador more recently is the checklist that we go down, which is fiscal stability, access to infrastructure, and most importantly, the business environment itself. Are there resources yet to find in the country? And both Ecuador and Colombia check those boxes. I think one of the most important is that access to infrastructure. There's lots of ways to get to market, get to tidewater in Colombia. In Ecuador, there's well over 100,000 barrels a day, closer to 200,000 barrels a day of space in the OCP pipeline. And we're currently shipping even some of our Colombian crude through Ecuador. And so the combination of all of those is it's an attractive place to do business, and there's lots more to do in both countries.
Well, let's just talk a little bit about how it has become both of these countries have become stable jurisdictions, and that's why these are safe investments. So what has happened in the region that now allows you to move forward with the certainty that, of course, investors want?
Sure. I think Colombia has a long history of fiscal stability. Sure, taxes go up, they go down. They adjust with the volatility of the world, and we adjust accordingly. And I think there's a long track record in Colombia. In Ecuador, it's been a little bit cyclic, but most recently with President Lasso, he's very clearly trying to generate investment in the country, and to do that, I think you have to give attractive contract terms for us to go in and spend risk capital exploring, which we're doing. You have to have a sense of security long term with a contract. One thing about Ecuador is when you are in a position that you sign a contract, they also have a long history of honoring those contracts. The window of opportunity that's come with President Lasso is more of a tax royalty type contract, very, very comparable to what Colombia do. And therefore, we entered the country. We were already shipping oil through the country. We entered with 3 exploration blocks, and we're quite excited about Ecuador.
So can you give our viewers an overview of the major oil fields that the company has?
Sure. We have four big ones. The biggest, which is over half of our reserves and our production, is in the Middle Magdalena Valley through the center of Colombia. A very stable area. It's in a valley between two mountain ranges. Very prolific in terms of resources, and been part of the oil industry for 100 years. The first discovery in the country by Exxon was 101 years ago. So a long history of operating. The Acordionero field is that field that we're currently water flooding, and we're trying to go even a step further with enhanced oil recovery with a polymer pilot project. Over in the Putumayo Basin in the southwestern part of the country, we have the Costayaco field, the Moqueta field, and in the southern part of the basin, the Cohembi field, which we're partners with Ecopetrol on. Acordionero, Costayaco, Moqueta, we have 100%. We have no partners. And Cohembi in the south, we're partners with Ecopetrol, the national oil company.
You mentioned the way in which you're enhancing oil recovery. Why is this important to understand, and what does it do to enhance your return on the well?
Sure. So water flooding is the first form of enhanced oil recovery. To us, we start off the Acordionero field, for example. We started off um, in the very beginning, knowing that to get the highest recovery, we needed to inject water, and so we put the facilities in place to both lift lots of fluid and re-inject lots of water. And I think the single most important thing about enhanced recovery and that mindset of we're not just going to produce fields on primary production and be happy with a low to medium recovery factor is it's much easier to spend the money, spend the technical effort to get every last drop out of each field, and it's really a philosophy of our company is to try to be as efficient as we can, not only on cost structure, and that's a big part of it. You have to have a low cost structure, but also to apply the technology in each field because it's the best use of investors' money is to try to get every last drop out of each field.
So that's water flooding, and then the next step is to inject a polymer.
Inject a polymer, very proven technology here in Canada, in the U.S., and really all over the world. It's polymer really is injecting water and you thicken it with a polymer to raise the viscosity to get an even better sweep of the oil out of the rock, whether it's tight or very permeable. In our case, we have very permeable sandstone reservoirs, so it's really susceptible to polymer injection. It's not something that you just decide to try and try. It takes lots of work. Our team have been working on this for a couple of years, doing the core work, doing all of the laboratory studies, and all of the indications were that we could really enhance recovery, enhance by 10 to 15% recovery factor. And when you're starting from 25 to 30% of what's originally there, it's very material, and that's why we spend so much effort and time studying these techniques.
Best to get everything that you can out of that well, because you also then have to go back to exploration, which I understand that you're about to do after a couple-year break.
That's right. We started after COVID and all of the volatility in the market. We used that time to prioritize our portfolio. We continued to get permitting in place, and we're quite excited about what we're doing. We've drilled 5 wells this year. 4 look like they're um, material to us in terms of discoveries. We have the all 4 of those on production testing at the moment. Two in Colombia, 2 in Ecuador, and quite exciting that the geology is working the way we hoped it would, and it's not necessarily having four discoveries that we're testing. It opens up plays in all of those areas, and so we have a good land base in both Colombia and Ecuador, and so we're very excited about what that means for us in terms of testing oil in 4 of those discoveries.
That's a pretty good rate of return. You put a couple of drills in the ground and you get a result. It does suggest that there is a larger resource there.
There is. When you look at Ecuador, there are some massive oil fields in Ecuador, and there's been a long period of very little exploration. And so when you have the geology working, and you have seismic in place, you have lots of the tools that we use in the industry. We're excited about that. We're excited to have the opportunity to get good contracts and the confidence to invest the risk capital. If you look at Ecuador, the Oriente Basin in Ecuador, it really is an extension into Colombia in the southern Putumayo, where we've been active for quite some time. We've got a large land base, and we're just getting started there in the Putumayo. 3 of our largest fields are in the Putumayo. And then the Middle Magdalena Valley, we have a good land base, and that's where our 4th discovery is. And then the Llanos Basin. We also have some lands in the eastern Llanos Basin of Colombia, and we hope to be drilling there over the next couple of years as well.
So one of the questions that investors ask frequently is, okay, you have revenues, you're operating. How's the company looking from a balance sheet perspective?
Sure. It looks very good in terms of where we've come from. We invested substantial money in the Acordionero field to put I mentioned the facilities in place to get ready to waterflood. We're just ramping that injection of water and ramping our production. And so it took material investment, which we had in place by 2019. When COVID hit, the whole industry had to take a bit of a pause. And so we're back on track now, not only exploring, but optimizing our production. We're producing about 32,000 barrels a day at the moment. We have the capacity to increase that over the next couple of years to the 40,000 barrel a day, just with the discoveries that we have in place. And if you look at our balance sheet, we're going to end this year with a net debt of about $400 million. That's from a $700 million debt when we were going through COVID, and so we're very comfortable. We're comfortable enough that when we look at the outlook and we look at a reasonable oil price range, we're starting to return that capital that we're not spending on exploration, not spending on enhancing recovery, to investors through debt, buying back our debt. We've already paid down our reserve-based lending facility. We're buying back our long-term debt, and we're also buying back shares. We're trading at a substantial discount to our even our proven reserve base. And so the best way for us to return to shareholders is through both of those mechanisms: buying back shares, buying back debt.
So back to those same investors right now who are looking at you going, okay, this might be a good time for me to be looking at the company. What's your message to them about why the timing is right now?
I think the why is we're just getting started. We're just getting started on our exploration program. We've got lots more to do. We have lots of permits in place, and things are working. Things are working on the assets that we have in our water floods, in our pilot polymer enhanced oil recovery project, and we'll expand that. We'll expand that not only in the Acordionero field, but into some of our other fields that we're studying at the moment. And the significance of having success with a drill bit, with exploration, that's the highest leverage we have as a company in terms of finding new resources, and we think it's working. We think it's working, and we'll continue those efforts and try to give investors the best return. I think the other reason, not just Gran Tierra, but the industry in general, if you have good assets in stable countries that have track records, as we are in both Colombia and Ecuador, I think looking long term, there is certainly an awakening that oil and gas in any scenario are going to be around for decades to come. And so if you look at good teams, we're very proud of our execution team in place at Gran Tierra and in Calgary, in Bogota, in Colombia, and in Ecuador. We have the skills and to go along with those assets as well. And so we're always looking at new opportunities, and I think if you look at the track record of the team that we have in place, we're focused on value for investors.
Well, I can't help also think about what's happening geopolitically right now. We've got the war between Russia and Ukraine, and that's putting pressure on prices. And then we're seeing a step back from exploration and even production in North America, which continues to put more pressure on it. Then, not to mention OPEC and what they're doing, we're seeing the price of oil continuing to rise, and it looks like it's staying where it is right now and has the potential to go higher, which speaks well for what you're doing.
Yeah, I think if you look at what's happening geopolitically, it's terrible what's happening between Russia and Ukraine, and it's a volatile time for the world. I think the world, or if you look at demand, there are places in Africa and Asia that don't have electricity. There's 900 million people on the planet that don't have electricity today. There's another billion people that have limited access, and so the demand for energy is going to continue to grow. If you look at where oil is being utilized, only about half of that is going to any kind of a energy in terms of transportation, in terms of generation. The rest is going to uh, things that we use every day, from clothing to lubricants. And so the demand is going to be there for a long time. And I guess the answer to your question, in a volatile world with a highly skilled team, I think we look at our peers out there, and some of the big guys are continuing to rationalize their portfolio and will continue to sell assets. We take a look at what's the value to our shareholders. Is the value better putting money into exploration or acquiring assets that we know that we can enhance and create value with? And we try to balance that, and we'll continue to balance that. Not anywhere in the world, but in particular places in the world where we're very comfortable that we can tick the boxes that I started with. Fiscal terms and stability, yet to find resources, places where we know that we can apply our skills, apply our balance sheet, uh, and return value to investors.
This is a really interesting time to be looking at your company from an investor's perspective with all of these elements coming together. I wish you great success, and I hope that you'll come back in the future and give us further updates.
I sure will. Thank you, Stu.
Thank you.